Alright, good morning, good afternoon, good evening. It is the 16th of October 2017, and I'm going to go with one more dollar pair, starting with the dollar exchange first. Yesterday I did start off with the dollar pair as well, and as you can see, currently we still appear to be in if this was wave 4 here at the top, this can be possibly wave 1 of 3, or basically the end of 3, and then you may see wave 4. Well, basically I have a 1, 2 here, 3, then the wave 4, possibly wave 5, or this is a 1, 2. If it's a 1, 2 count, well then I should see price break the green Ichimoku cloud line where my cursor is at around 93.42, and it will find some resistance near the top of the cloud at 93.60 or so. If it breaks through the cloud, well then this top could definitely be in jeopardy, but it's good for the currencies as a dollar strength. So with that being said, let me look over at let's start with the weekly on the New Zealand dollar. I was up several hundred pips, and I closed out roughly around this area once price started to go up, and I saw that price was finding some critical resistance here in this area, so I went short at 71.90 at half a contract earlier today. And you know what, there was a report that came out roughly at around maybe 2 or 3 p.m. Pacific, which spiked it up, and I watched it, and once it spiked up, then I took it short. Now I'm very cautious in this trade because if you look at the RSI here, you can clearly see a bit of divergence. Let's see here. So if you go here, you can see that price was low here, and it's about even, but this is much higher than this B. And so with that being said, I had a discussion with a colleague of mine earlier, and we went back and forth here on the on this, and we did speak about RSIs and stuff, and I tend not to look too much into RSI, but don't get me wrong, it is a helpful tool to keep. But on a long-term time frame, I actually do a lot better on weeklies and dailies with stochastics than I do with RSIs. And if you notice with the stochastic right now, let's see. It appears like it's oversold. So I would tend to favor this on a weekly time basis and look for a possible maybe another low, because right here, as you can see, price could come a little lower basically before it turns up. So I'm not comfortable with this, and before I go to sleep I actually may get out of this trade, because this can be like a 1, 2, and then let's say hopefully we'll be moving into wave 3, but I'm not sure on that one. But on the 240, it's a little bit clearer, and on the 240 you have a clearly flag wave move down for 1, you have a WXY for 2, and then you can count this as a 5 wave, which will be 1, 2, 3 here, or 3 here, and then you can count this as 4, and then this is an extended wave 5 as a 1, 2, 3 here, 4, and then 5 of 1, and then you have a correction, which can be an A or a W. I don't have this as a 2, but when it comes to the weekly that I just spoke about in now, based on my counts in Elliott's, and if I take away all of this stuff here, these GAN fans and stuff like that, price is going to go much higher than what I currently have it at 72.06, which is why I'm hesitant in staying in this trade shortly. I, based on my analysis, see prices going more towards 7,300, at least 72.50, 60, somewhere around there. And then the best trade to go short in this market will be more towards this Ichimoku cloud resistance level of closer to 7,300. Now, even if you did a Fibonacci retracement from the top to the bottom, you will still see that 0.618 of the previous leg is right near the Ichimoku resistance line. So that 72.91, 7,300 level, somewhere between 72.50 and 72.90. In this particular area is where price is most likely to find its critical resistance, and it will be a less riskier trade to go short there with a stop at either 74.34, which is a really wide stop, or you can go about more to about 73.50. So if it gets closer to the 7300 area, then going short will be the most likely scenario. In this case, I most likely am going to close out of this particular trade and just take this 30 pips and go with it. But on the RSI on the 240, it does have room to go to the downside. And as of right now, it's already crossed. So I may trail my stop, and I may put my stop probably at around 71.75 or so. And if price does continue to fall, I may trail it by about 10 ticks, 10 pips, give or take. So that's just the next market I wanted to look into. And then I'll go back into yesterday's market, which was the euro dollar that I spoke about. So with the euro dollar, here is price is finding critical support here at 1780, and in order for this to continue down, I would need price to break this and break it with some confidence, which is why I have my stop at 1806, and I'm probably going to lower it to 1800 because it is trying its dear best to break this critical support level, and it's getting there, but it's just barely moving. So this may be a buying opportunity, and if one was to buy, if it does not break this particular level, you would want to put your stop, you want to have it tight really, so you want to put your stop at around 1750. If you want to be a little bit more cautious in thinking that it's to the upside, well then you want to go to the next support level of 17.15 or so. So in this particular case, RSI is telling me that it did break it. I had the trend line here. It did break it, so I'm not moving as of yet. My stop is going to stay here at 1806, and I may lower it to 1800, but my primary is still to the downside. And if I am wrong, at least I've already locked in a little over 50 of the 80 pips. So I'm okay with that. If price does reverse on me, well then, let's say if it went down to 1754 or so, and then it went all the way back up to 18, well, that's okay. I'll take the 50 pips and I'll look for an opportunity to go long, because if I catch it in that 18 area, well, the upside potential is actually above this A, which will basically be above 121, possibly even 123. So I'm not worried about trying to catch the trade. I'll let it come to me. For now, my primary is that this is an A, this is a B, and we are currently working on C. But I do have my doubts here, because this is not really an impulsive move at all. It's a sideways correction move, and it is possible that this will be the alternate wave 1, and then this will be a 50% retracement of this wave, which will be significant for wave 2, and then you basically would see a move back to 120. So that's what I talked about yesterday, and that's pretty much what I'm keeping at today as well. So with that being said, if you're not a professional trader, make sure that you have your stops very tight. If you're going to go short, you kind of missed it in a way. I mean, if you did want to just get in because you're just anxious to get in, I wouldn't recommend it. But if you happen to want to get in, you would definitely want your stop to be at like 1810, 1800. So even getting in right now at 1779 is not a good idea unless you were going long. If you're trying to go short, it's a very risky trade if you're not already in it. As you can see, I'm in it closer to the top at 1862. So I'm willing to take that 50 pips if I get stopped out, and then take 30 pips with the New Zealand trade, and just take 100 pips and call it a day for the second trading day of the week. I just jumped in these markets today and yesterday, so I'm okay with over 100 ticks in 24 hours, just in 2 markets. So that's just 2 half contracts. That's over $1,000 just like that. So, and I rarely speak about money. It's really not a big deal. I mean, I would rather just be able to continue to trade on a daily basis than just to speak about how many ticks and pips I end up getting on a trade. That's irrelevant, honestly, especially to education. So with that being said, let me go ahead and end this video. I'll keep it short and simple, and tomorrow I plan on speaking about the pound dollar and what's likely ahead in that market. But in the euro, you're probably going to expect low volatility tomorrow. Things may pick up by Wednesday, being that Wednesday morning, Mario Draghi, however you say his name, he's due to speak at around 4 a.m. New York time. So it'll be about 1 o'clock in the morning on California time, where I currently am. So in that particular case, it's most likely going to have some volatility during his speech or after. So I don't expect too much to go on tomorrow, and towards the end of the night of tomorrow, once he speaks at around 1 a.m. Pacific, that's when I expect some volatility in the euro. Until then, any questions, go ahead and send me an email. Other than that, happy trading.